The eighth and final leg of my tour of Northern Europe by rail and ferry saw me back on a train, in fact 2 trains, travelling from Riga to Vilnius in Lithuania, which, like its northern neighbours, had a huge economic contraction last year, and the government was forced to put into place harsh austerity measures. Now, without recourse to raising revenue through tax increases, the government is now turning its attention to getting a better return from state-owned companies. What I wanted to see was what they're up against. Well, I've just arrived in Vilnius in Lithuania, where I'm going to be looking into what the government's doing to improve returns on state-owned assets as part of a program to restructure this economy. The government estimates the total value of its holdings from transport to energy at about €5 billion, but it only gets a dividend yield of, wait for it, less than 0.1%. The government wants to improve this return and has just published an inventory of what's on its books.
We do have very solid assets, and with even quite basic fixing, we can get really substantial revenues to our budget. Sweden did the reform in 1999, and many companies like railways, like Post, started to be profitable after 100 years of losing money.
Right.
That's the example we're looking for.
One place the government's making a noise, the forest. It wants to convert more than 40 companies into one and run it on commercial terms. Again, it looks to Sweden, where the forestry industry was 20 times more profitable than Lithuania's last year.
Interesting technology here in Lithuania.
The industry says it's already changing for the better.
Some recommendations, such as increasing efficiency, introducing regular financial reports, are quite attractive for many industries. Improvements in efficiency in our sector are made every year.
But change won't come easily.
Lithuanian experience suggests that in reality the top managers of all those companies are employed based on loyalty to the party in the power rather than the competence of those persons. So I think that decision-making process, especially if they are talking about public-owned companies, are based on the political cycle.
So what should the government do in order to break this nexus?
I see only one way: privatization.
The government does plan partial sell-offs, but that may not be enough to cut down the standing practices of what it regards as inefficient industries. David Tweed, Bloomberg, in Vilnius, Lithuania.